Hello traders, Gary Wagner here, just before 11 o'clock in Honolulu, 5 o'clock in New York. It is Thursday, 14th day of March, 2019, and this is the Daily Report for Gold and Silver. To say that there has been volatility in the markets would be an understatement. In fact, in terms of gold, we saw gold give back the last two previous days of gains as it closed down about $13. We have the front running month, which is April futures, down $13.70 at $12.9560, and that is a net decline of $13.70 on the day. Of course, we are in the June contract, and that is trading at $13.02 after experiencing a decline of $13.80. The low on the day was $12.99, so far away from our stop, but it is about $3 against us rather than $10 in our favor. So we have seen quite a change over the last couple of days. As you will see when we pull up our technical studies, though, I do not believe we have sustained major chart damage. Now, the other precious metals did close even lower in terms of percentage drawdowns, with the exception of palladium. For example, silver lost about 28 cents, 15.18, and sustained a 1.8% drop in terms of pricing. Platinum also a pretty aggressive drawdown, almost 2%, 1.94%, closing at $825.40 after sustaining a $16.30 drawdown. But palladium continues to rock the world and rock the precious metals boat in terms of being the black sheep, so to speak, and that closed up $7.80. Interesting, but definitely not favorable action for gold bulls out there. We have seen some extreme volatility within the precious metals markets, with today's decline giving back the majority of the gains that we saw exhibited on both Tuesday and Wednesday of this week. The other thing that is noteworthy, of course, is the fact that after breaching above the 50-day average, which to me is fairly significant, the market broke back below there. But the reason that I believe we did not sustain any major chart damage, and I'll show you this on both the April, which is what we're looking at, as well as June, in which we have a current trade in, is although in terms of April, it didn't quite go to the 0.23% retracement, just shy of that yesterday. You can see that this low is above the 0.38% retracement, and I believe that that's pretty significant because, as I've said, that to me is a fairly critical area that I would like to see pricing hold. Now, we did get the market come back a little bit, so it did not close off of the lows, but quite close to the lows, with April closing at 95.90. And traders, when we switch over to the June contract, and this of course is where we have our position, we are currently trading at 13.02. We went long at 13.05, and so for that reason, I don't believe that we saw any really significant chart damage in this either. Now, the one thing that is interesting is that we talked about throughout the week and a little bit last week was the fact that this particular area, the 0.23% retracement, especially in the June contract, we felt could provide some resistance, whereas I believe that the 50-day, while significant, would not be a challenge in terms of the market overcoming that price point. That, in fact, is what we saw. We saw the market move above it and hit this high as a resistance yesterday, and today did not break back above it, but rather really sold off and sold off hard. The key difference is 1292 is the 0.38% retracement. We didn't really come close to that. The low in the market was 1299, so the lows were really just below 1300 as this comes closer and closer to being most active. And I'm looking at this 1287. This is where our stop is. So we obviously didn't come close to being stopped out. We are still in a trade that's long and currently 1302.30, so it is just about $1.70 against us rather than $10 in our favor. We'll have to see what tomorrow brings and then what happens next week. A lot of this is sensitive to not only the dollar index, but the dollar itself has been under such volatility due to what's going on with the euro dollar and the British pound as they try to come to some sort of Brexit or resolution about how they're going to leave the European Union. And as long as that is in play, we could see increased volatility, but I still firmly believe that we are in a wave 5 right now, and my target that we talked about, longer term target I should say, is still sitting at about 1374. Traders, my recommendation is to maintain your current long position and to maintain your current stop. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow for the weekly wrap-up and review. Bye-bye.